Marcus. For that, we want to welcome in Eddie Ghabour, owner of Key Advisors Wealth Management. Eddie, thank you so much for joining us today. I was excited to see that you were going to be with us today. I know you key in very much on the Fed, and I know you have some takeaways from the Fed chair's recent comments. We would be remiss not to talk about one of the key focus headlines, which is about the Fed Governor Lisa Cook today. There's a lot of focus on that. President Trump has sounded off on Truth Social, saying that he's firing Cook. Cook issued a statement saying that he doesn't have the authority to do that. How do you read through all of this right now, all the gyrations around the Fed?
The most important thing for today's headline for me is how the market reacts to it. And the market is shrugging off this battle between the president and the Fed this morning. So that's a good thing. I think the biggest thing that we need to focus on investors is the major pivot that the Fed made on Friday. It really caught us off guard as well, too, to how dovish they actually were, considering how hawkish they were just a month ago. And the biggest takeaway that I took from Friday's speech was the fact that they're going to focus now on the labor market, not so much concerned about the 2% inflation target that they have. And they also said something very important, that they felt like the inflation data, if it goes up, which they expect, would be transitory. So that means when we get a hotter inflation number on September 11th, possibly, it's not going to change their stance of cutting rates. And so that's a major pivot and the last piece to the puzzle for this bull market to continue to run.
I had a similar takeaway to you, Eddie, because there were some who argued that it was a measured commentary from the Fed chair. I did think that the tilt was dovish, especially when he said may warrant adjusting policy. Now, obviously, he gave that caveat that, the Fed is not on a preset course, which we've heard from the Fed chair before. So, there is still a little bit of room for an adjustment beyond what we potentially see. But you believe that many of the doubters of this rally will now be forced to change positioning. Why do you believe that?
Well, at some point in time, the bears have to capitulate, and we've continued to hear the same narrative from them that we're going to go into a recession or things are overvalued, and eventually they'll be right at that point in time. But like, for example, small caps, there is a major short interest in small caps. Institutions continue to short them, and eventually what's going to happen is they're going to capitulate and they're going to have to start buying. That's what our belief is. And when they do, that's generally when you get that last major leg up in a bull market before you have to worry about a correction. And so until everyone is on one side of the trade, I think right now we're going to continue to grind higher. It's a weak seasonality, we know that. But when we look 6 months out, this is about as good of a setup as you can see for investors to still see the amount of pessimism out there, but the major liquidity that's going to continue to increase in this market and continue to drive asset prices much higher, in our opinion.
Eddie, let me ask you this. So you mentioned 6 months out, but I believe your view is that we can see this bull market last another 12 months. So what gives you that conviction?
So when we take a look at the framework of setting up into the fourth quarter and going into next year, we think that we're going to see growth actually accelerate. When you take a look at the liquidity in the marketplace, now with a dovish Fed, you have central banks around the globe cutting rates. If you see growth accelerate and you still have government spending is increasing, tax cuts and deregulation factors have not even hit the tape in regards to economic data. So it's a bazooka of liquidity that you can't fight. And yes, are some stocks overvalued? They are. But overvalued can get a lot more overvalued before you have those corrections. So we're just following what the market is telling us. And right now, the market is telling us that it is a major bull market.
Okay, let's go back to the point that you made about small caps. You've been bullish on small caps for a little while now. Just let me know when you initially started to become more bullish, because I don't remember. I know we talked about the last time, so I don't recall what was your trigger. And what are you paying attention to for the signs where you see for more momentum from small caps, and especially the positioning that you mentioned that you think the short interest that we're seeing is short-sighted?
Yeah, so again, I think the Fed was a big win for small caps because these smaller companies have a hard time getting capital when monetary policy is tight. And when you loosen monetary policy, it helps the smaller companies. And so when you take a look at the action on Friday from the response to the Fed, and you looked at what the leaders were, we believe those are going to be the leaders moving forward. So we started buying back small caps a couple of months ago. And it's been a hated trade. It's been frustrating. We've been in and out of it, for full disclosure, because we've had some head fakes. But last time I was on, I believe I said I don't think this time it is going to be a head fake, that this rotation is real. And if you get an economy that starts to reaccelerate going in the next year, while there's major short interest, while the Fed is being very dovish, that's when you see the small caps really start to outperform like they did in 2021. And that's the last point I'll make. It's one of the few areas that's not back to the 2021 highs, and we think things will revert to the mean, and it will blow through those highs of 2021.
Eddie, let me ask you this. Beyond small caps, in your view on where they can go from here, let's talk a little bit about tech. Tech is obviously a big focus this week, NVIDIA coming up, right? It's a heavyweight. The market, though, has broadened beyond just the gains that we've seen in tech. You say you no longer have to own tech, meaning, I guess, that we're looking for momentum elsewhere. Where else do you see potential?
My point was you don't have to only own tech. We still own tech. Matter of fact, we increased our NVIDIA position last week during the big sell-off because they're still the most important name in the market. But my point is we can now broaden out. So small caps are buy, in our opinion, on dips. Consumer discretionary, which is what we own, we would increase that on dips. And home builders as well, too. We've been bullish on home builders. And we think that this next 6 months to 12 months, those will be three areas that could outperform the S&P and possibly even the NASDAQ. I think you still have to have the NASDAQ stay strong because of the weighting in these names. So I'm not underestimating how important they are, but I believe these new areas that are broadening out and showing relative strength can continue to do that.
All right, Eddie, we will leave our conversation there for today. Always a pleasure to chat with you. That's Eddie Ghabour, owner of Key Advisors Wealth Management. Thank you, Eddie.